There we go. Good afternoon, everyone. Welcome to today's Trading the US Open live here through the Live Trade Room. And today is Wednesday, the 3rd of October. And to just give you a very, very brief introduction, we're technical traders. We trade these markets technically. We do have a comprehensive understanding of the fundamentals and the sentiment behind these markets. But what we look to do is look at price charts in order for us to establish some high probability trading opportunities. We're looking to identify these opportunities. Then we look to, in a live dynamic environment where we're trading with live capital, we look to execute and manage those trades with a high degree of consistency in our approach, but most importantly, discipline with regards to our capital. So we do have a certain philosophy in these markets, and that is to ultimately look to cut our losers short as quickly as we can. We're quite impatient when it comes to taking losses, and we want and give those markets an opportunity to let those winners run. And that's how we grow our capital over the medium and longer term. All with one view, and that's to look into to book in profit on a regular basis. So without further ado then, if we could start, as we always do, with our risk warning. Of course, just familiarize yourselves with the risk warning, which is currently up on screen, so take a brief moment to familiarize yourself with that. So moving along then, we shall just touch upon we'll conduct a very quick review of potential market moving news. Now for this, we will refer to our Forex Factory, which is just a news website that we utilize to get a very brief snapshot in terms of the news flow and some of the news events that can impact our trading when we trade these financial markets. And what I want to draw your attention to is the ADP figure just in here. It's due out in about 6 minutes time, and that's the only major news. We had a services PMI figure. Obviously the UK economy is very service driven, so it is an important sort of economic indicator really, but it's come in pretty much as expected, so no major change there. And what we have here is the ADP non-farm employment change number, which is the prelude to the non-farm payroll figure on Friday at lunchtime. So hopefully you can join us for that. So as far as the news is concerned, we have crude oil inventories again at 3:30, so we'll keep an eye on the crude oil markets, and we'll see what opportunities may present themselves over the course of the session. So we'll hopefully come back to the ADP figure very, very shortly. Okay, so without further ado, let's get up our trading charts and just have a little look at this US dollar, see what's been going on with it. We've had quite a constructive reversal really over the course of the European session. So we the market, the euro was strengthening against the dollar, and just at these highs up here, the market started to roll over to the downside. So it's really had the weight of sellers pushing this price lower, and it just shows that there is still the appetite for these prices to squeeze lower. Similar situation with the pound dollar. Was looking quite strong for much of the day, but it has this weight pushing prices lower, obviously riding the dollar strength story, which is hopefully still exists in this market. We can obviously see that it has the potential to do that. We've not had much move really in the dollar yen over the course of the trading session, so it'd be interesting to see what happens to that market. Now we have seen the dollar strengthen against the Swiss. Now the problem we have with that is this is effectively a pullback off the lows. So we've had the constructive move to the downside, and we're just in this pullback phase. So what we don't really want to be doing is buying, sort of going into these areas expecting the price to push up. What's likely to happen is at some point we're likely to get a little bit of a correction, and then we might see some movement to the upside. So we can gauge that around these levels, wherever this market pulls back to. I know that you are fully aware, but we don't get markets move in linear fashions. They move higher and they pull back, and they move to the upside and they pull back, and that's more of a reality in terms of what an uptrend looks like. It's moving higher, and the more sort of techniques we can use to identify opportunities to either capitalize on the pullbacks or the breakouts above these levels, there's plenty of opportunities within this bit of price action to push prices higher. So that's what our skill is, that's what our job is. But this one now is just pulling back, sort of just continuing. Like we're seeing quite a strong pullback now off the lows over the last week or two. So needing a bit more information with that. The dollar CAD is just hanging around these lows. We may end up seeing a rollover to the downside, or we might see the dollar start to strengthen against the CAD. Either way, not much to work with right now regarding the dollar CAD, so do bear that in mind. Moving on to the Aussie dollar, we're still in this market to the downside, and that's what we were hoping would be the case. We've seen the low of the 71.45, and we just expect perhaps just a break marginally below this lower level, below the 71.45. Hopefully if we get one more flush to the downside, we look to take profit on that trade. So that's the Aussie dollar. So we'll come back to this, and we'll have a look at this again and just assess what's going on. The New Zealand dollar was the other market that we were looking at. We decided to only get into one of them, but as you can see that the New Zealand has moved quite consistently as well, kept grinding to the downside and just making these new lows. But we were talking quite a lot about the size of the move, and the Aussie dollar has a much larger range on a daily basis to that of the New Zealand dollar. So we were looking to get in around 65, and yes, we are down at the 65.52 level now as we speak. But we've benefited from a slightly larger range, although we're kind of currently retracing this pullback now. So we just selected the Aussie dollar over and above the New Zealand dollar because they're correlated, of course. The pound has kind of strengthened a little bit against the euro, so it's the euro that's really weakened off quite a lot. We can see that from the euro dollar chart, and it's playing out against the euro pound, and also to a certain degree against the euro yen fairly recently. So we're kind of, we still do like the idea of these markets rolling over to the downside, but maybe it's tomorrow we get that opportunity where the market breaks a low and starts to continue to move lower below the 131.16. So a couple of potential trades in the pipeline there. The gold market just moving sideways. We're actually going to look at this market seriously. We've been looking for the potential for this market to break to the upside, and we never really got that follow through, and now we're rolling over to the downside. This is a strong structural break pushing lower, and we like the idea of this market below the 1200 level. So if we do get that break, it might be worth considering. So we'd like to come back to that. The oil market will continue to monitor, but we do have crude oil inventories at 330, so we don't really want to be perhaps getting in prior to that, unless we get a short, sharp move in either direction effectively, either above the 75.93 or below the 75.05. The chances of that happening between now and the 330 are probably relatively slim. I'm just conscious of the time, so what we'll do is we'll flick back to that ADP figure, and we'll come back to the oil markets in a second. We can see how this market has just reacted in the last few minutes. A little bit of weakness has kind of creeped in. That would imply that the number, the ADP number, is probably on target somewhere in and around 185, maybe even just a tad higher than that. Let's see what the figure is. Do we see a little green figure? Oh, we do. We get to see a decent green figure, which is the 230, and look how that compares and contrasts with these previous figures. So it's very much in keeping with the actual print. So the expectations have been far lower than the actual reality, which is contributing to this dollar strength story. So yeah, this is a market to the downside, which has really got it's become significantly weaker, and we have the 1542, so quite happy to look at that level Let me see, does this roll over to the downside now? We still have these lows below it, but we'll take a look at it. We'll have a look at this on a much smaller time frame. We might be able to capitalize on a bit of a move down to these lows, so we'd like to come back to that. So just a little quick flick through. So the dollar is definitely strengthening, as we can see now. It's coming into a lot of these markets, perhaps not so much the dollar CAD. And we expect the Aussie dollar to squeeze lower, and we just nearly got a new break to the downside, but not quite just yet. New Zealand pushing lower. The pound is beginning to strengthen against the euro, so it might suggest there might be a better opportunity in the euro dollar over and above the pound dollar, so that's that might prove quite useful for us. We're going to leave the yen pairs for today. Might come back and look at those tomorrow. We'll definitely come and look at the gold market and the US oil, but we're not likely to get the move that we're looking for. We've struggled to break above new highs with the oil market, with the UK oil market, the Brent oil. Not much more movement really in these. We did have a breakout above this level earlier this morning, and the S&P is threatening to push higher, and we're getting a bit of a consistent approach now to these three markets, which is something we couldn't really say yesterday. So a little bit more coherent price action there. The FTSE 100, we're obviously getting that sort of explosive move, and the 47.89 is the high probability opportunity to the upside, and we are squeezing higher, and a similar situation here for the Euro stock. So we do have this sideways moving range between 34.54 to the upside and the 33.68 to the downside. So once this market, we're currently in the middle of that. Similar situation, except it's the 75.56 to the upside and the 74.45 to the downside. So we can look at those, and that just about sort of covers the review. I'd like to come back to the US equities maybe on the open and just see how the markets react at that point. So we can continue to look at the oil market. As you can see, we're just range bound currently. The gold market can be bottom right. So this is effectively our trade plan, and we are squeezing lower. So maybe the next pullback we'll look to get into the downside. We're a bit lower for the actual breakout. Breakout trade was probably a little bit higher than that. So anyway, we'll look at selling the gold market. That could be a high probability opportunity, and I think it would be useful to have a look at the euro dollar, top left. And now we're getting this little breakout bit of price action below the. Let's just get into this at this point and let's see what's going on here. So we're getting this little breakout below this level here. And we do have a relatively small sort of 14-15 pips stop loss above this level. Just about to get into it. And we've just flushed 10 pips lower. Okay. That's a shame. We've probably benefited on the pound, on the Aussie dollar. Yes, we have. We've had that flush through to 71.42 now. Got in at 71.60. So let's see if we can ride a little bit of this bit of this price action. And all we simply do, we were interested in getting in below the 15.42 with a stop loss above the 15.55. But all we simply do now is wait for the pullback. So hopefully that will give us an opportunity that we can, and very clearly pull back to 15.42. We take it to the downside. if we get a little bit of a turnaround price action at that price. So fairly easy and fairly straightforward. It should be okay for us. We might get an opportunity sooner rather than later with this. So we'll bypass this. So we're currently, let me see. So what we'll do is we'll manage the Aussie dollar bottom left, and we'll look at the pound dollar top left, and hopefully we'll get a couple of moves in these markets. So we're currently up 17 pips in the euro, in the Aussie dollar, but now crucially we're below the 71.50 level, so that should add a bit more momentum, and hopefully we get a little bit of a squeeze further to the downside. So we've got the gold market potentially rolling over to the downside, so we might look to get involved in this market pushing lower. Not much happening with the crude oil just yet. We had a very positive ADP figure, so it's likely to provide a little bit of an impulse move, hopefully in the euro dollar to the downside. We've already seen the actual move. We were looking to get into it around the 1540, somewhere around there. And we had a nice flush lower, but we have benefited in the Aussie dollar, and there's still only a 4 pip exposure to the downside in this market. So in actual fact, we can now take that risk off the table. So we're a zero risk trade to the downside now that we've flushed lower. And that's objective number one for us, is to try and get risk-free as quickly as we possibly can. And then we can start focusing on profits and our ability to generate those profits. So we're getting the pullback to the level that we would like this market to pull back to. We just needed to be patient, and you often get these chances. So if you don't get involved in the pullback, of course, you can look to wait for that pullback like we're currently seeing. So we're back to this level. And we just hope that this is not the bottom for today's market, that we do get that sort of rollover price action to the downside. So the next sign that this market will just roll over to the downside, hopefully we'll get a couple of indecision candlesticks, and then we start seeing some selling coming in, if that's the case. So if prices just sit around this price here, the 1542, that's exactly what we would like to see. And then if we close with a bit of indecision and then some weakness starts to creep in, then we can get into it around this level and have a 14-15 pip stop loss in this trade, with the expectation for this price to push lower. So we shall see. So let's watch these markets closely. So there's our rejection candlestick. Just give it a few more seconds. Okay, so now we've closed, so we've pulled back, and let's see if we get into this to the downside. So there we go, let's get into that trade then. So all we're doing is we missed the initial breakout trade. We've experienced a bit of a pullback, and we will just place a stop loss just above the high. So the 1556 level is now our stop loss, just up at this level here. So we just expect this market to continue to roll over to the downside. So we just want to break this low just in here and see if we get an impulsive move lower. And then if we break this 1530 level to the downside, we can then take all this risk off the table and hopefully just have a couple of pips exposure in this market. So we're finally in the euro dollar to the downside. I know a few of you guys were getting into this trade at a much higher price earlier this morning, so very good trading. We've broken below that 1550 level, which is quite important. So now we want to see this level just flush lower and see if we can again just get a bit of profit out of today's trading. So now we just need to give it a little bit of time. And we're getting that flush lower now. Well, we hope. So we've got quite a strong ADP figure, and that should build into the fact that that we should be getting a positive, or it's very likely to do that we'll be getting a positive non-farm payroll number, which will add more strength to the US dollar potentially. So that's really what we'll be looking for. So Theresa May says that Britain will never accept current EU Brexit offer. So that's interesting. But she also tells the UK Conservatives that the end of austerity is in sight. So those are strong words. Okay, so of course we've got the Conservative Party's party conference going on currently, likely to provide a little bit of extra spring in the euro. We'd obviously like it to work in our favour, of course. We know during times like this that it can create a little bit of unstable volatility, and that can be a concern for us as traders. But what we want to make sure we do is we minimize our exposure to the downside as best we possibly can. So if we start getting failures and we start getting uncomfortable erratic price action, then we'll look to cut them pretty quickly. So we do want this market to continue to spring lower. We do have the 1524 just below it. Depending on how the Aussie dollar's doing, we might look to kind of take a bit of profit maybe at these slightly lower levels, and to just bank just a profitable trade, a couple of profitable trades today. That would be nice. The gold market is just bouncing off this 1200 level. It's very likely to do it. So when we get a break below that level, we could look to get involved in a breakout trade below the 1200 level and just put a stop loss above these highs in here. So let's have a look. Let's have a look at the Aussie dollar on these smaller time frames, and again on the minute time frame. So So we can look at these trades now, and we just need to kind of give them a little bit of room. We can have a flick through the remaining trades now very shortly. The next news event for us to consider would be really the ISM non-manufacturing PMI data at 3 o'clock. And again, like if you go to Forex Factory, you can obviously get some information about the actual news event. But it's important to just probably observe that often the actual newsprint is often very close or relatively close to the actual forecast. So it's really those significant variations that are likely to push prices higher, or even potentially push prices lower with regards to the US dollar. So again, if you can see, it's just useful looking at these graphs to sort of prepare yourself for all eventualities. And of course, you get various different sort of actual prints in this market. So you got to bear that in mind, really. We have crude oil inventories, and we can see that they've been negative for the last 5 weeks, I'd say, and that has definitely sort of supported the price of, certainly from a fundamental perspective, supporting the price of oil. Now, if we get a positive number, like we did last time, it might start to impact the price of oil in an adverse fashion. So they are currently at significant highs. So let's see. It'd be interesting to see what we see happen in the US oil markets. So just looking at this here, the UK Prime Minister May to say Britain is not afraid to leave EU with no deal. That's a strong position. Her Chequers deal seems to be kind of a halfway house. It seems to be a concerted effort to have a soft Brexit, but of course, if the EU throw it out, a no deal would be a little bit of Russian roulette. So no one really knows the impact that would have on a global basis. But obviously, Theresa May seems to be quite tough with her words. So interesting developments, and of course we'll see how these things play out in these charts accordingly. So if we get a breakout below, I'll just record the exact level. The 1200.54 level. If we get a break below that, we could get into it and stick our stop loss just above this handle in here and see if we get a little bit of a thrust lower. So we've got to be a little bit patient really in this trading session, that's all. And let's see if we get a reaction. So if we sell the euro dollar and the pound dollar, if we sell the euro dollar and the Aussie dollar, which is what we're doing, then we would hopefully we'll get a nice thrust lower in those markets. Hopefully we'll get the gold market selling over to the downside. There are 3 correlated trades, so do bear that in mind when you're trading these. There is a correlation between all these 3, and the correlation is obviously the US dollar, and we're expecting the US dollar to strengthen across all these 3 markets. So So hopefully we'll get that thrust to the downside. Just posted there in the chat box if you'd like to interact with us here. If you have any questions, or if you're not too sure what we're trading or why we're trading it, then do feel free to let us know. Post it into your chat box. We'll see if we can capitalize on a couple of winning trades here. What I'll do, just for a support and resistance perspective, is we'll just mark this low down here. This was our pullback area. See if we get a bit of a thrust lower. We've got a new low in the Aussie dollar. Let's see if we get continuation below those levels. Let's have a look at the Aussie dollar in a little bit more detail. So we can see that this market is sort of quite slowly grinding lower each time. It just makes a little dash lower from these levels, and then it kind of pulls back. And for that reason, we're going to give the actual trade a little bit of scope, a little bit of room, and see if we get this next impulse to the downside. So let's have a look at it on a 5-minute time frame. So I suppose this is a good example. You're just getting downward pressure, but just not an awful lot going on for sort of 15-20 minutes. So let's see if we get anything more constructive than that on a 15-minute time frame. Just to pull back off the lows. That's all it really is at this point. And unfortunately, we need to give it a little bit more time. The gold market is really struggling to see if it can squeeze below the 1200 again, but I'm sure that could happen fairly quickly if we just get a little bit of strength coming into the US dollar there. Doesn't seem like there's an awful lot to really work with just yet. Hopefully this market doesn't sort of go to sleep for a prolonged period. Hopefully we get some continuation. It's something that has not been prevalent over the last few weeks, really, is the fact that we get suggestion of moves during the first couple of sessions, at the beginning of the open. And then the market has kind of gone a little bit sideways and a little bit quiet. But we're still in these markets to the downside. Hello, Connor. How you doing? Good work with that euro dollar trade. Great trade. And then the 15 sort of 50 level became support on the way down and then resistance on the way up. So we're getting into it just more recently, just off the back of the daily time frame, really, to the downside. So I'm sure we'll get... oh, so you're still in it. Okay, very well done. Yeah, it kind of had a really sort of nice rollover and just a clean sort of push lower, didn't it? So yeah, why not? Then the 1550 can become resistance, and yeah, good. And there was some strength sort of coming into the dollar, and you got a good ADP figure. Yeah, absolutely. So yeah, all of those things just added up, and hopefully we'll just get a similar situation where the market just sort of bumbles around, bounces around, and then gets that next flush lower. So it's done it a few times today, and let's see if it does it again. Yeah, and it has gone a bit snoozy on occasions. Let's hope we get the flush lower. You know, we have to remain positive with these things, don't we? Yeah, great. So yeah, that's effective trade management there. So you locked in some profit and you moved your, I suppose your stop losses became profitable exits, and the market moved in your favor. So what you've been relatively lucky with is the structural nature of this move, I guess, has been quite helpful. And this is kind of what we try to achieve, and we don't always get that opportunities, and sometimes you can make little errors, well, not errors in judgment, but you're being consistent with your approach, and then you just get stopped out briefly and you book in a bit of profit on it. But getting into those markets again can obviously then be quite difficult. So it's all about fine-tuning that decision-making process, really. The risk of a little less profit on the original target is well worth the risk for the possible target too for you. Okay, fantastic. So it fits in with a comprehensive approach. So that's exactly what trading is all about. So very well done. Yeah, and a really good call. And on a daily time frame, we are just a complete rejection of this level, and we're getting in below the 1550 level to see if we get a little push down, even a sort of 15-20 pip winner in this market. You know, we would take that pretty quick. Yeah, so you're targeting the 1510 area now. Yeah, that's kind of in line with yesterday's low, I think. Yeah, the 1505, so just down at these lows. Very possible, but we do have a lot of potential support coming in at these prices, at these slightly lower prices. So do bear that in mind. We might very well get a nice flush lower. We might even get really strong continuation between now and Friday. So we just trade the conditions as we see them. So we're still selling the Aussie dollar, expecting prices to continue lower, and we're also in the euro dollar to the downside. not much has really happened apart from a pullback off the lows in the gold market, but we do like this market below the 1200 level, and we've got the 75.05, which we doubt is going to be broken between now and crude oil inventories, but we might get an explosive move at that point, and I think that's at 3:30 our time. So and a good strong positive number in the ADP in the end. So that all should bode well for us, and hopefully they don't all go to sleep and we can make some money. Yeah, absolutely, Connor. Okay guys, we're actually getting close to the top of the hour, so we're actually going to switch across to the live trade room at this point. And again, just to reiterate, those of you that are perhaps new to joining us, do please read the information below. You're very welcome to join us. We're currently offering a 14-day free trial to access up to 76 live trade rooms per month. So there's lots of live trading content. We trade with live capital, with complete transparency behind our trades, and focusing on, I suppose, what traders really need support with, because unfortunately it is all about education, and the more educated you are and the better you understand the nuances of these markets, the better chance you give yourself in terms of making consistent returns. So you're very welcome to join us, and if you decide to stay on, then you might be pleased to hear that the fee that you'd have to pay is just $9.99 per month. So we are anxious to keep things as affordable as possible, and that only really just contributes to your access to so many live trade rooms every month. So we do hope it's a bit of a no-brainer for those of you that are seriously interested in trading. So do read through the details below, click on the link. You're very welcome to join us, and it looks like we're getting a little bit of a push in these markets now, so that's good. So what we'll do is we'll wrap up this trading session. We still like gold below 1200. We still like oil. Depending on the crude oil inventories, we might get a little bit of move in those markets, and we do like the euro dollar lower and the Aussie dollar to continue lower as well, especially with the good ADP figures that were just released at 115. So on that note, guys, thank you as always for joining us. Do take care. You're very welcome to please subscribe to our channel. You'll be notified. Certainly if you click on the bell notification, you'll be notified when we go live. And we are live at 8 AM and 1 PM every day. So do feel free to join us. And also connect with us through our Facebook, Instagram, Twitter, and LinkedIn. The details are all there currently up on screen. So all that's left for me to do now is to thank you very much for joining us. Do take care, and we look forward to seeing you next time. For everyone here, take care and bye for now.